Hey everyone, welcome to Common Size Financial Statements. Here we're going to be comparing two abbreviated income statements for Walmart and Starbucks. And we're going to first turn them into a common size. In other words, we're going to express all the items as in terms of a common base figure. So this common base figure is going to be sales, right? So in other words, we're going to express each item as a percent of sales. So our sales as a percent of sales, well, it's going to be sales divided by sales. Okay. Now we take a look at our cost of goods sold. Again, we're going to divide our cost of goods sold by a percent of sales. And we're going to do that again for all of the other items. Again, always based off of sales. So hopefully you see the pattern here. I'm just going to make the denominator, those sales, absolute, so we can just bring them down to an absolute cell reference, not going anywhere. Okay, so remember, again, we're just dividing by percent or by total sales. So once we figure that out, we can quickly complete Starbucks as well. Of course, we're going to divide by its sales, and then we can start looking at a comparison. So there's another way to benchmark. Of course, we can compare our competitors. So one thing to keep in mind though is in terms of inputting the numbers, they want us to round to do 2 decimal spaces, except for net income, where they actually want us to round to 3 decimal. So make sure we do that. Okay, wonderful. So go ahead and punch in the numbers. I'll be right back. We've inputted the numbers. Let's check our answer. Okay, and the rest is really taking a look at comparing the results. So first is, well, we're going to compare the net income. So if we look at Walmart's net income, we see 3.19%. Okay, so then there was 3 cents in sales dollars going to the bottom line, versus Starbucks, which looks like it's a negative amount. Okay, so we're losing money here. That's how much is going to the bottom line. So therefore, just based off of the net income, you can sort of deduce that Walmart is doing a better job. Okay. Now, a couple more questions. Well, one more question, really. And this is now, we're getting a little bit more specific. So even though overall, yes, Walmart's going to get a better job, we want to take a look at the cost of goods sold, compare those two. And we're also going to compare the selling and administrative expenses. So Starbucks, might actually be doing a better job in terms of cost of goods sold, right? So if we see that their percent of cost of goods sold is actually lower, but if we compare the operating or the general expenses, we can see Walmart is actually much more efficient. So they have a much lower percent expense for selling and general expenses. Okay, so just start considering that. We can finish this question, and I'm sure we'll have an opportunity to investigate further. Thanks for watching, and happy financing.